Good morning, everyone. I'm here this morning, as Eileen explained, to talk about the Corporate Sustainability Reporting Directive that Ian referred to, and essentially it is the, if you like, the EU's response to the global reframing of corporate reporting to include sustainability reporting. And it has its roots in the European Green Deal, which obviously is the strategy towards no net emissions, carbon emissions of greenhouse gases by 2050. And also it was a commitment in the Action Plan for Financing Sustainable Growth, which is really about orienting investment towards the most sustainable outcomes. And ultimately, it resulted in the directive itself, which entered into force in January 2023 alongside the EU taxonomy and the Sustainable Financial Disclosures Regulation that Ian also mentioned in his presentation. So it was very much part of a package. I really liked at the time, and quoted it often, Commissioner McGuinness speaking about the rationale for the proposal when it was published in May 2021. Europe wants to lead on sustainable finance. Sustainability is no longer on the margins, but it's moved to the mainstream, and it's done so at lightning speed. It's at the heart of policy, business and finance. Ultimately, it's about making the right choices, and to make the right choices, you need good information. And this is the reason that it was proposed. So essentially, it's to really, the purpose of the directive is to put sustainability reporting on the same footing as financial reporting, and ultimately to transform the way that companies' performance is valued in future. So essentially, I think I'll kind of dive straight into its requirements. It's annual reporting by companies on sustainability matters, and they are defined as environmental, social and governance, including human rights matters. So it is a very broad scope, sustainability scope. The reporting is underpinned by the European Sustainability Reporting Standards. They're actually adopted by the EU Commission, having been developed by EFRAG, and I'll talk a little bit about their content later, and their, if you like, their purpose and framework. The information itself is going to be included in the Director's report in a dedicated section, and reporting is on a double materiality basis. So it's impact materiality, looking out at the impact of companies' operations on environmental matters and so on, and financial material, looking in at, I suppose, the risks and opportunities of environment and other matters on the company's operations. And the reporting includes the value chain. And that's probably important, really, when you're considering the penetration of the directive in reality. The information is also subject to a limited assurance opinion initially, and it's by suitably qualified statutory auditors. And I thought I might just say something here, that I think the vision when this was being negotiated at the EU amongst the 27 member states of giving this role to the statutory auditors was so that they would take with them all of their training around, for example, professional skepticism, and then be additionally qualified for the purposes of sustainability reporting. So, so that's very much that was very much the vision at the time. And I say that really because sometimes there's some commentary, well, really, these people should be sort of independent people other than, but actually, no, they should be from this professional audit background, and as I said, bringing all of those, their independence and professional skepticism and the other ethical and professional qualifications with them into the role of assurance for sustainability matters. So onto the scope. It's going to, when at its full maximum capacity of the phasing, include all large undertakings. So that's defined in the Companies Act and in European law as having 2 out of 3 of a turnover of 50 million, greater than 50 million, balance sheet greater than 25 million, and employee numbers greater than 250. The only SMEs that are directly in scope are those that are listed on stock markets. and that excludes micros. And then finally, subsidiaries and branches that are large of non-EU companies. Well, initially, if they are large enough and if they're in scope of the, if they are in scope of the directive, which they will be because they're large, they'll be reporting on a European basis. But then, as the rules come up to the full phasing, in due course, they will have to report at a group level. Also at the level of the parent. So the phasing, large public interest entities are up first. They're essentially those that are publishing under the existing non-financial reporting directive. Then we estimate a small number, it'll be less than 50 in Ireland, certainly in that first phasing. But the biggest uptick in the numbers will be in the large undertakings, which they'll start to report for financial years from 1 January 2025. And we estimate that to be certainly 2,000 to 3,000 entities at the moment. Then the listed SMEs are the next in scope, but they have an option to opt out until 2028, and that's actually an option that they can take themselves. I'm told in Ireland we don't have many of the listed SMEs, and indeed if you are a fund and you're reporting under the Sustainable Financial Disclosure Regulation, that would carve you out of the CSRD, but otherwise it could lead to double reporting. Then finally, the large subsidiaries and branches of non-EU companies reporting at a group level, that's for financial years after January 2028. So we're going to see the first reports by the largest companies next year. So I'm looking forward to those. The flexibilities, the earlier questioner mentioned these. I might just say that when you're negotiating at EU level and there's 27 member states, sometimes flexibilities just are part of achieving the compromise. And Ireland was very ambitious during the negotiation and to really conclude the negotiation and also to get running with CSRD and not to delay any further. So there are some flexibilities that included, for example, it included the opt-out for the SMEs until 2028, and then the exemptions for commercially sensitive information. The other important flexibility is that it'll be 3 years before the value chain reporting is mandatory. Up until then, it'll be on something of a comply and explain basis. So I'll move on maybe to this arrow, which I think I'm trying to really show the penetration here. So at the top you can see, well, we start off with the sustainability reporting and value chain reporting becomes mandatory. So if you think about it, by 2027, and I'm sure all the companies in scope will be working on the value chain reporting before then, you're going to see the impact of CSRD stretch beyond just the reporting entities and into the value chain. They'll be looking for information. So I think it probably will be quite transformative beyond looking, say, at the simple scope of the, saying, well, it's just large companies. And again, I think to Ian's point about how long it can take to get good at this, you know, I've been working in this area for a while now, and I certainly see the first 3 years will be very much learning, and then, you know, then you'll be working on getting better at it and getting good at it, and building up the skills in the organisation in terms of reporting, because, and I think I'll talk a little bit about the ESRSs and how that probably is going to change the way that sustainability reporting is going to be very different to financial reporting, because you're probably going to be dealing with people who've never really had to engage in some of the data collection that's going to be needed by this reporting. So that kind of is a good segue into the European Sustainability Reporting Standards. These are the underpinning, I suppose in a sense, this is where the real detail is of what CSRD is going to do. And it's housed in a separate piece of legislation that has direct effect. So the ESRS are going to specify these, all these data reporting points, and they encompass this double materiality reporting, so looking at the impacts, risks and opportunities. And this is the latest acronym, the IROS. But essentially the impacts and the impacts will be the impact materiality and the risk and opportunities, the financial materiality, and I just probably to emphasise that opportunities is there. You know, there are risks, yes, but there are also opportunities related to reporting on these environmental, social, or taking account, if you like. The reporting is just the output of environmental, social governance. Sustainability matters. So there's 12 standards and developed by IFRAG, which so I think it's really important that the standards have kept with that vision of standards being developed in an independent, expert-led way. So IFRAG was given the task. They actually are called IFRAG. It's formerly known as the European Financial Reporting Advisory Group. Then they were adopted by the Commission, obviously. They're inspired by standards, global standards like the Global Reporting Initiative, but really they go much further. Chiefly probably in the double materiality, but also in the broader focus than purely environmental. So looking at social, the social and governance matters. I think the last thing we need in this area is to have a great deal of fragmentation emerging. So there is a continuous dialogue at EU level with the International Sustainability Standards Boards to try and ensure that there's interoperability as far as possible. And you can see the annexes in the ESRSs that reflect that. But just to make the point again, the ESRSs do go further. So there they are. The ones on the left are the ones that have been adopted. There are 2 cross-cutting standards. Then there are 5 environmental standards, 4 social standards, and 1 governance standard. So they were adopted in July 2023. Coming down the line, proportionate standards for the listed SMEs. Importantly, voluntary SME standards to assist SMEs who might be reporting in the value chain, and then the sector-specific standards. That sector-specific standards work has been pushed back a little to allow for IFRAG and the Commission to really put a huge amount of effort into bedding down the first 12 standards, given the scale and the number of data points. But the voluntary SME standards and the proportionate listed SME standards, that work is well underway, and we're hoping to see a consultation draft on the voluntary SME standards this year, I understand from IFRAG, and you know, possibly to see that being developed fairly quickly in light of the value chain reporting, or finalised fairly quickly. It's actually probably at a very good stage of development. So the ESRS 1, I thought I might just touch a little bit on the 1 and 2 ESRSs, because they are really the framework on which everything else hangs. And there's a huge amount of detail and guidance there. So ESRS 1 is all about the guidance on how to apply the topical standards. So double materiality, due diligence, value chain reporting, timelines, how to prepare and present it, and then some phase-ins. During the final stages, there were some additional phase-ins introduced for individual data points, and they're contained in Appendix C. And again, I wouldn't see this as watering down. Like, there's a reality really to some of this. Some of the phase-ins relate to data points that are very difficult to actually capture now, and that's a sort of an agreed understanding. And again, just to go back to that independent, expert-led process of developing the standards. ESRS 2, the second cross-cutting one, and it has, again, the description of the materiality assessment. And just to say, there's specific guidance developed by IFRAG, again, very detailed, on value chain reporting, materiality assessment, and on the data points. And so that is even, you know, diving even further into all of the detail that's going to need to underpin the reporting. And then there's guidance around governance processes, how you kind of think about your strategy as it relates to sustainability matters, and then finally, just you know, the kind of troubleshooting, addressing previous reporting errors, statements of compliance, and value chain characteristics. So that's the kind of just a little bit of a, if you like, a taster of ESRS 1 and ESRS 2 that I think as I said, this vision of it being the framework on which the topical reporting hangs ultimately. So implementation, as I said, there's a huge focus at the EU Commission in terms of guiding member states and companies in scope on the implementation of the directive, and EFRAG's focus is on the standards. In Ireland, our focus was on the transposition. The new rules are given effect in Part 28 of the Companies Act, and we are, today I think we're publishing some FAQs, refreshing our website. So if you'd like to get any future updates on developments on CSRD, you can sign up to csrd@enterprise.gov.ie. Our department is also responsible for the transposition of the Corporate Sustainability Due Diligence Directive, which Ian touched on also, that's due to be transposed by 2026. So if you'd like to contact us for updates on either of those, just sign up at the email. And thank you very much. I hope you found that of interest.